And welcome back to the Mortgage Hotline. This is Sean Low Rate LaRue bringing it in for you on this Sunday morning. How's it going, Jason?
It's going really good, Sean. I'm really glad to be here this Sunday, and I'm glad to be talking about short sales. I'm glad to be here. I really love doing this radio show. I love the fact that we're able to get the news out to the people about what's going on in modifications, mortgages, and basically real estate. There's just so many questions out there that people have, and hopefully we answer at least one of them every week.
Hopefully one. I want to bring a little bit of value just to one lucky listener.
Exactly. just that one thing, and you may not, it may just be flipping through, and it probably just flipped right through. No, I'm just kidding. So anyways, but what we wanted to talk about today is I wanted to talk about we've talked about in weeks past about some short sale stuff. We've talked about what some of the modifications that I've done, and we really seem to get a lot of calls or people it kind of spikes their interest when we start talking about successful stories, the same as you did on some of these FHA streamlines and everything like that. When we start talking about what we've done, someone might say,
changing again.
Yeah,
the world keeps changing. we're having more and more changes in like the FHA streamline just changed.
Really,
and I know that the HAMP program is going to change.
I want to talk about that HAMP program right now. That's the Home Affordable Modification Program, and what that is that's the government's answer to the loan modification problems that were happening out there. And home affordable modification, basically, there's a few things. There's HARP, that's a home affordable refinance, and then there's HAMP. Okay, I don't do much of the HARP. I would prefer to steer someone towards a streamlined FHA refi at that point in time, because that's for people who aren't late. In essence, that's basically maybe even a little bit about what it is. But the Home Affordable Modification Program is for people who have a Fannie Mae or a Freddie Mac loan. Okay, that's supposed to be what it's for. But what these banks are doing, and this is just a word of caution, is if you've got a modification and they're doing some HAMP programs, Home Affordable Modification Programs, and you're not with Fannie Mae or Freddie Mac, they're still sending you the Home Affordable Modification Package.
How can they do that?
They're doing it. And then they have you make the 3 trial payment period, 3 trial period payments, say that 5 times fast, and they're collecting that, however many that adds up to, but you're not really under the government's program. You're just going along with their little structure. So they send that out, and I think it's to just get an extra 3 payments from people. But they're doing it all the time, because you can easily go to Fannie Mae or Freddie Mac.com and check out whether you have a Fannie Mae or Freddie Mac.com, and then you can go to and if it's not there, all is not lost. You need to call and give them your loan numbers and stuff like that, and who it's with, and they'll tell you for sure. So if you check it on the computer, because you might type in like court, CT period, and something might be messed up like that.
I thought definitely you had to be under Fannie or Freddie to get that. So
if you
double check,
yes, because that's when you're getting the real home affordable modification. Now these banks will tell you that in some of the banks, the reason why I think they're doing it is because the paperwork's been made for them by the government, and the program is working, and they really like it because when they send you a home affordable modification package, there's no interest rate disclosed, and there's no term disclosed. They just give you a 3 trial payments and say blindly make these, and the servicer's keeping most of that money.
The only reason the HAMP program works, though, is because Fannie and Freddie's actually the ones holding the paper.
Exactly.
Like they are the investor.
Right.
So if the bank's not, if the bank is doing this and your loan is not with those people, they're not the ones that actually have the last say. They're not the investors.
Exactly.
And so who has the last say?
They would in that instance. And why they're sending out the home affordable modification paperwork to people who are not under Fannie Mae or Freddie Mac now, in the weird web that's been weaved through all these mortgage-backed securities and all these things that were sold to sometimes 25 people on one loan. I know that sounds really strange because they sell them in these big bundles, and sometimes one company or one hedge fund or one whatever it is can't afford to buy that whole bundle. So 25 people do. 25 people really own that loan, and 25 people need to make a decision. I.e., Bank of America taking 12 months to fund get to the bottom of some of these modifications, and it's a little tiny bit scary, the web that's weaved and how long it's taken some people to get these things done.
Okay, so what is something that you've learned recently about the HAMP program?
The HAMP program, okay, they'll go down to as low as, how they figure this out is they take your gross income, okay? So they'll add up all of your income, if you're on the loan, just use yours for right now, okay? You call up your bank and say, hey, they'll all pre-qualify you over the phone for it, typically, all right? Okay. Now, but you have to really know how to set up that budget because you can only call with so many scenarios, as you would imagine. So it's good to talk to someone that knows how to set it up or knows what the budget is. But what they do is when you settle on what that perfect gross income is, they multiply it times 0.31. Okay, so let's just say that it's $3,300 a month is your income. They'll settle somewhere around $1,000 or whatever a month.
For the monthly PITI.
That's going to be your monthly PITI and HOA. So they'll have they'll have some are doing HOA, some aren't. But you could always ask them. You could always throw that in there. Yeah. But they'll come up with 31%. So it's a great way to get right down to 31%. Okay. The other thing is
by the way, in my world of requalifying somebody,
right.
31% is really, really low.
Yeah.
I mean, on a front-end ratio, basically a front-end ratio is the ratio that, it's just the ratio that you use for all of your housing expenses compared to your monthly income.
Right.
Your housing ratio can go up to almost 47%.
Yep.
So 31%, depending on your other credit cards and car payments and everything, that's probably, that is very reasonable for you to,
It's 31% of what you're making. I mean, your gross. Now, everyone's like, well, I have taxes taken out and this and that. But when you're going for a mortgage and the home affordable modification, you're using your gross income. Home affordable modification is one of the only modification programs that actually uses your gross income. Most banks take your net monthly surplus, okay, after you pay all of your bills. So what I've learned about home affordable modification is this. They'll go down to as low as, how you qualify that is you multiply your determined income by 0.31. If you cannot get to that payment by going as low as 2% or by extending your term out, so do a 40-year loan at 2%. If that's more than what that 31% is, you're not going to qualify for that program. Okay. So maybe adjust your income, or maybe throw in some spousal income, maybe throw in some room rent if it's there. Don't make it up, but you need to get it so that it works. Well, and that's the equation that you use.
What if the bank just lowers what I owe?
If the bank lowers what you owe, you're going to be waiting a long time, brother.
You know what? My property's not worth what I owe on it right now. So.
Well, I'm a local law firm. Why don't I just take $4,000 from you and I'll try to get it done for you, Sean?
Yeah, have you had much success with that?
Well, I've had a lot of success at taking $4,000 from people. No, principal reduction is not a reason for a loan modification. If that's your only deciding factor, or that's the thing that's motivating you to call a loan modification expert, a real loan modification expert would tell you that you have a better chance of. I'm not even going to go what I was just going to say, but I was going to say something, but I was thinking, it's AM radio, and I better not. But it's once in a blue moon that's going to happen. In fact, there's only 2 or 3 banks left that do it. Wachovia does it if you have an option arm loan. And IndyMax sometimes will if you have an option arm loan. I'd say probably 1 out of every 25 that they do. And there's a few banks out there that are doing short refis, which is almost a principal reduction for those that aren't late. And I have all the information on that. So anyways, So that's what it is. So that's how you'd get down there, okay? I want to run over just a few updates with some of these banks, and then we're going to have more on mortgages once we get done with these loan mods. All right. The Bank of America is really out in left field. I'm beginning to wonder whether who answers the phone. You're really talking to me.
What kind of experience are you having there?
Well, right now I'm having an experience of about 6 to 9 months wait time with Bank of America.
6 to 9 months for a loan modification?
I'll get back to you in 9 months on that.
Is that?
No, I'll let you know.
You'll get back to me in 9 months?
Yeah,
with a response to my question?
With a response to your question. That's kind of how I feel on a daily basis. No, we call and it's like beating your head up against the wall. No, I've heard it take some people. I mean, I had a gal that I just took her deal over and ends up that she's going to short sell. But the thing about it is she's been trying to do a modification for 2.5 years with them. She's not with Fannie. She's not with Freddie. And, she's trying to find out who the heck owns their loan. They won't tell her and they won't modify her. And she makes more than enough income to make her payment. She just she was in that transition from having Medicare, having Social Security, having that pension kick in. In between, there was a time there where she couldn't work and she wasn't receiving benefits.